Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond over at the Contrarian Trader, and thank you for spending a bit of time with me on this beautiful, really beautiful holiday weekend. I had a great time. It was my birthday on Friday. I'm going to share with you a couple of gifts. I'm a very lucky person, great family, and some really great friends. So I'm going to walk you through because I must be setting off some really weird signals. We're going to go over some charts here first. But I'm going to wait for some people to get in here. Hey, Patrick, good to see you. Amigo. Hey, brother. So, a couple of the gifts that I got, I'll skip over to the top two. Now, I don't know if you can see this. Hopefully you can. Anti-monkey butt cream or butt powder with calamine lotion. I didn't know I needed this, but apparently I do, and I'm proud to have it. So very, very good stuff. What else do I have here? Oh, fresh balls cream. I hate this green screen. Fresh balls cream. I don't know what I do with this yet, but I have an idea, I guess. And what else do I have? Caffeinated aftershave. What man should be without this? So that's not the top of the list, close to the top of the list, of course, but the Pimp Mac Daddy is this. This is what I call my, hopefully you could see this, my summer single malt. 1942, Don Julio, sipping tequila. Outstanding stuff. Gary, hey, how you doing, brother? So, good stuff. Great to have it. Thank you for everybody that sent me stuff. I really appreciate it. It won't go to waste, especially the anti-monkey butt, anti-friction powder with calamine lotion. You got to love it. All right. So, what we're going to go over tonight, we're going to go over the futures, of course. Members, we have the weekend commentary posted in the members area. These are the symbols on our watch list. Blue Apron, Beyond Meat, CTXS, TFFP, TFF Pharmaceuticals, never heard of it. Now I do know about it. CyberArk, AGQ, that's another leveraged ETF. USLV is sunsetting. This is our play for silver. I've been asked about what we'd be using for that derivative play, and AGQ for silver. A few stocks that remain on our watch list. Chewy, it pulled back last week, bounced. I've updated our entry point, price target, and stop loss point. Rare, same deal. That was on our watch list last week. Uranium, URA, the metals are looking good. In particular, platinum, palladium, gold, of course, silver, uranium. We have to have exposure to it. So on the members area, I've already updated price targets, stop loss points, and entry points. So go check it out. Let's go to the futures action. Thanks, Joseph. They are good gifts. RL, happy 5th. That's what they say my maturity level is, yeah. Young, thank you very much. Thank you, everyone. And yes, Oliver, without fail, smash that like button if you would. Thank you very much. All right, let's go to the S&P first, S&P 500. Let's see how we're opening up here. It's early. A lot of negative headlines out. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. And we're flat. We're flat. We're off the lows. I mean, there are some headlines out there that are pretty nasty. And we are flat on this session, which is optimistic. Market Watch, I'm surprised to see it, but they had a little bit of fake news out there. You know, the incubation period is what, two weeks for COVID, and they have a headline out there that says due to the level of celebration during the 4th of July weekend, cases spiked to like 126,000. How do you know it was because of this weekend? You know, it's just more doom and gloom. That's what they want right now. So It's good to see that we're flat on the session so far. Let's go to the small caps, see how they're behaving. The small caps are up, and rather handsomely. My only concern about the small caps is that we had broken down on Thursday. Friday, of course, we were closed. Thursday, we broke down below this support level, which I'm now going to change to green. And we'll see whether or not we could recapture what was support is now resistance on a 4-hour basis anyway. And we're continuing to gain a little bit of momentum here. It's good to see. In the back of my mind are a couple of things. One, the headlines that came out over the weekend, doom and gloom, is what they want. Two, the fade. We saw fading late in the day on Wednesday, then again on Thursday. Not great. So a little bit of concern, but not enough for us to go selling our longs and going short the market. We're just going to take notes as we move along here and not get shaken out of our positions just yet anyway. Let's go to the US dollar. The dollar is down at current. I'll tell you, RSI is not looking bad here. I have to say it. RSI putting in higher lows and threatening to put in higher highs. Now, here's the line in the sand for the dollar. At least short term, very short term. It's a 4-hour chart after all. You know, if we're able to recapture this minor, very minor secondary resistance level with this here at 97.63 being a primary resistance level, if we recapture it, that's such a positive tone for the dollar going into the week. Taking a look at gold, one of the metals that has been very, very bullish of late. You're seeing very nice consolidation. You know, I want to go out there. I want to put my head out there and say, you know what, or my neck out there and say, you know what, maybe we're setting up here for a potential head and shoulders setup. Left shoulder, head, right shoulder, with this being your neckline. But I don't know. It's a maybe. You know, it only matters once you break that neckline. Otherwise, it's all conversation and speculation. So it's nothing to trade off of. I think that longer term, the miners and gold are going to do very, very well. Unless, of course, yields surge. And we're going to go to bonds in a moment. This is a weekly chart. We're holding the breakout point on a weekly basis. So we'll keep an eye on gold. Silver is up. Looking good here. I want to continue on with the metals, taking a look at Palladium and Platinum. We'll go to Palladium first. Getting hit right now. Down about just shy of a percentage point. But this upper band of resistance here is very, very critical. And if we manage to close above it, Palladium's a buy all day long. And the reason why I say that is because when you pull back and you take a look at a weekly chart, this is what we're dealing with here. Right? So this 1% down, just shy of 1% down, higher level. I mean, when you take a look at this chart on a weekly basis, you're looking at, wow, this is potentially a beautiful setup here if and when we do break out. Right now, not much to do except for watching and waiting to see whether or not we break out. But if we get that breakout, brother, look out above for Palladium. Same thing holds true for Platinum. Platinum, which is at current, breaking out on the week. They tried to do it last week. It was rejected. This week, they're trying again. Will they succeed? We don't know yet, right? So we don't want to buy on the hope. We want to buy on the fact that Platinum is broken out on a weekly basis, right? So at current, Platinum is looking very, very attractive, 4-hour chart. Not much to do here yet. We'll wait for we get a breakout on a 4-hour basis. We're up at current just shy of 1/3 of a percentage point. So we'll see. How do we close? We'll set up a bit of a tripwire here. And what we'll do, because I'm very interested in keeping a close eye on a breakout here. All right, so this is in yellow, secondary resistance. Doesn't mean all that much, but if we do break above it, then I'm going to want to keep an eye on it, because then what's going to happen is we're going to challenge this primary resistance level. So Platinum is looking good. Hey, Rick, how you doing, brother? Will, good to see you. Yes, please hit that like button. Yes, please. Okay. Let's continue on. When I was looking at the charts earlier today, in particular, what stood out were the ag names. We were talking about agriculture, in particular the DBA, weeks ago. That's the agriculture ETF, the DBA. And last week you saw corn, huge breakout. Look at this rip last week. And take a look at it on a weekly basis. Look at this rip. A major breakout. In fact, we broke out back here the week of, this is a weekly chart, the week of June the 1st. And retest 1, retest 2, retest 3, follow through. Really pretty chart. I think a good entry point is a pullback and potential retest of this 20-period moving average in blue. Let's see if that holds as a floor. But corn looking very good. You want to take a look at other ag names. Soybeans ripped last week. What else? Wheat. Not a huge move on wheat, but soybeans and corn, very nice. Let's check out Bitcoin. Bitcoin is very lethargic. In fact, it's trading down below support. It's off the lows of the session. Let's check out a weekly chart. At current, we're trading down below weekly support on Bitcoin. Doesn't mean we're going to close there, but we're not starting off the week all that great. RSI looks good. Higher lows here on RSI. But PPLT, the Platinum ETF, all right, cool. Okay. Hey, TA, good to see you, brother. All right. Let's go to some headline. Oh, no, oil. They have to keep oil going. It's down about 0.75 of a percentage point at current. Off the lows of the session, I think we're going higher. And there was a headline out earlier today. Warren Buffett may be 90 years old, but he doesn't take a day off. He was in there buying up, I think it's Dominion, some of their pipelines. So I don't know how to trade that yet, but if Warren Buffett's in there finding value, we should all be looking at that trade. Where is my nat gas trade? All right. Here we go. Okay. Natural gas up. Spot 4% on the session. Looks like we're going to go up higher here. So let's take a look at some headlines. Let's get rid of this. Oh, it's not Dominion. Duke. I'm sorry. Oh, Dominion's in here as well. So here's the headline. Duke Energy, Dominion scrap plans for Atlantic Coast Pipeline after years of delays. Looks like the Supreme Court was involved here. I don't know what the play is here, if any. I just read this only minutes before going live. So I need to do more analysis. But the point being is that if Berkshire is in there buying up $9.7 billion worth of Dominion and Duke, whatever they're buying here, and a piece of the Cove Point liquefied natural gas, that may be the play. The liquefied natural gas play, LNG. So I'm going to follow this a bit more closely, do a little bit more research. I don't know what the trade is just yet. I don't want to pretend I do. All right, so interesting headline. This is a tell. Early stages of what could be a trade here for the longer term. Economic data. Let's start with last week. On Thursday, we had non-farm payrolls, which came out. Normally they come out on a Friday, but of course, Friday the markets were closed. And we saw unemployment rate come in less than what was expected. However, I'm just absorbing this now. We saw a rise in non-farm payrolls versus the expectation. I'm not sure how that works, but okay. Initial jobless claims came in 300,000 or 30,000 more than what was expected. Factory orders came in. No wonder why we faded. Less than what was expected. Coming in this week, we're going to have the ISM non-manufacturing index. That's services. That's coming out tomorrow. Job openings, that moved the market last week. Let's see if it can move the market this week. It came out with a big beat last week. Thursday, initial jobless claims. That's going to be a big number moving forward. And on Friday, we have, I think this is a revision, the PPI index. It's a producer price index, measure of inflation at the producer level. So not much in terms of economic data this week. That leads me to believe that in all probability, we're going to go higher this coming week. Some other headlines to keep everybody nice and confused. Goldman cuts GDP forecast due to coronavirus resurgence. Okay, I guess Goldman is not yet net long of the market. Why do we deserve free advice from Goldman Sachs? I don't understand. Morgan Stanley on this other side gets even more bullish because mass layoffs mean even higher profits. Interesting. I'd like to see what sectors they're talking about, but interesting nonetheless. I like the Morgan story better than I like the Goldman story, because Goldman always acts in Goldman's self-interest. Morgan, not that they don't, but this is more interesting, makes me more curious. Let's, we'll circle back before we log off at 6:20 at current. I have members stock chart requests I need to get to, so I'm going to go to those right now. And I'm waiting for my new glasses. These are now my thrice chewed glasses that my little Aussie dog, Mina, for whatever reason, loves to chew on. I put them on my bedside table. She finds them. When I wake up in the morning, they're gone. She's a great dog, though. So I'm getting my new glasses. I'm now buying in bulk. This is like my 5th set of glasses. So if they're a little bit wobbly, you'll know why. Okay, let's do this. First up, DHR. Let's go to, this is brought to you by our friends over at TrendSpider. So I need to do this. Folks, if you're not a silver or gold level where you get TrendSpider for free, I have the best discount on the web using that link below in the description area. You get 35% off of TrendSpider, whatever level you want. So use the link below, discount code CT25Z. All right. RL, get the dog a pair of her own glasses. Love it. Very good. DHR. That was funny. I'm waiting for her to get my sunglasses, but I'm keeping them in the car. Danaher. Nice chart, monthly chart first off, beautiful. New monthly highs, always looking for that, especially in the first week of the month. The shares have been validated. Looks like we're moving up higher. Weekly view. Very, very nice. Very, very nice here. What we did is we broke out back here initially the week of June the 1st, failed to hold support. Then what we did was we rallied back, recaptured resistance. Then we did a retest the week prior to last. That is great stuff. Then last week, they came back in. They did another OCD retest. And what did they do? Continuation breakout after the retest. Love it. This is validation. Daily chart. This is the value of TrendSpider. If you're just blowing through charts, you want to know where resistance is, pop, overlay, and there you have it. So just keep in mind that while the higher level view is that we have monthly chart, weekly chart, new highs, we do have a little bit of resistance above. That doesn't mean that we're not going higher. It just means that we're going to bump along here. And this, unless of course we break out and above it, it depends upon the strength of the shares. But this could be a speed bump along the way up into this weekly overlay here in dash line, which is at, you could see the mid 180s easily on Danaher. Easily. Good looking chart. The next chart up, CCI. Crown Castle Holdings. No new monthly high yet. Consolidating nicely. Weekly chart. Weekly chart's very constructive. You can see, much like with Danaher, what happened when we hit that upper band of resistance. What do we do here with CCI? We hit that upper band of resistance. We pulled back to support. Good stuff. We failed to hold the 166.81 mark the week before last, but last week we managed to rally back. I'm not going to be the least bit surprised to see them want to retest this support level yet again. That would be a very, very good entry point for CCI. We'll keep this active for a while. And we're good to go. I wouldn't want to buy it otherwise. This is the best risk-reward entry point that I'm seeing thus far. We'll go to the daily chart in a moment. RSI looks good. Higher lows. And I believe last week, yep, we put in a new higher high last week. So what'll probably happen here, I think that what I'm hoping for will happen, is that we'll probably pull back and retest the breakout point in RSI, which you see frequently happen. And that'll mean, in all probability, we'll pull back on CCI on or about 166.50, thereabouts, give or take a dime. The chart looks good. Daily chart. Daily chart. We closed off the highs of the day on Thursday. Now, know what we're doing here on RSI. Let's see if I can get this. Let me do this. There we go. No, it's not letting me do it. All right. So you can see that we broke out on RSI. Now we're pulling back and we're doing a retest. We're holding support. So that's good stuff. Now, what I would do, I think that weekly support level is probably the best one. I think that we could retest, because this prior resistance level coincides fairly nicely with weekly support. So again, I like the 166.50 level, 166.90 thereabouts. Keep it loose, but a nice pullback and a retest. I think you have a nice entry point on CCI. I think we're going higher with these shares. Next chart up, AMRC. Daily chart's not looking good here. Let's stay consistent. Yeah. So we have issues here. This is a stock that got owned by the street, and they blew it right up and through that third standard deviation Bollinger Band. I warn about this constantly. You can't go chasing the shares when they're up above that third standard deviation Bollinger Band. Doesn't necessarily mean, because, as a matter of fact, if you would have asked me, maybe you did ask me about it last week, I would have said, don't buy it. But what would have happened the next week? They would have went higher and embarrassed me. But the rule I have is that I don't go buying shares when the stock is trading above the third standard deviation Bollinger Band, because you know that at some point in time, it is not going to end well. Unless, of course, you're momentum trading using a trailing stop loss order, okay, but stay small, because you never know if you're going to close strong one day above that third standard deviation Bollinger Band and gap down the next, right? So trailing stop losses are great, especially when you have a continuation move higher, intraday blow off top, then you're selling off of that top, and you get taken out as close to the top of the trading range as possible. I digress. Monthly chart, bearish reversal bar. Doesn't mean we're going to close at the lows of the month, but not looking good so far. Weekly chart. I want to overlay on this weekly chart monthly resistance to illustrate I'm not sure why it's not showing me. Oh, that's right, because we were talking about the third standard deviation Bollinger Band. My bad. Weekly chart. Let's get rid of the monthly overlays. Not necessary. Okay, so last week, what did we do? We rallied not just above the third standard deviation Bollinger Band. We pulled back to what was resistance back in February. Granted, it's being extrapolated higher, but we closed down below what was resistance is now resistance yet again. So on a weekly basis, can't buy these shares. Why? We closed right at resistance. Daily chart. And that brings us back to where we started, where we sold off, and on Thursday, we closed down below the lower band of what was the upper band of resistance is now resistance yet again. It blows, it stinks, but I feel bad for longs. But what I'd be looking for now on the shares is whether or not 27.96 is going to hold. That question I can't answer. But if you're looking for an entry point, I don't think we're pulling back here to monthly support. That would be at 2150. I think what we could see, if we do get a new lower low, I'd be looking at 2605 to even better 2418. Again, give or take a dime. Those are your support levels below that I'd be looking at. That's my take. Okay. Let's go to our next one, SMPL. The Simply Good Foods Company. That sounds like one of these Chinese companies. All right. Interesting chart. So I'm absorbing the history here. We peaked out September of 19. And what we did here on a monthly basis so far is that we have recaptured what was resistance for several months. Doesn't mean we're going to close here on a monthly basis, right? We still have a lot of time left in this month for these shares to pull back. At current, during this snapshot in time, it looks very, very good. But we don't know where we're going to close. Therefore, we need to defer to the weekly chart. And on the weekly chart, we can extrapolate here where that monthly support is. I wouldn't want to see these shares. I wouldn't buy these shares under 1950 per share. I would like to buy them at 1950 per share. Got to look into what this company does. I'm not sure. This feel-good, warm and fuzzy name they have makes me nervous. Weekly, actually monthly. Monthly. So in our book, were we wanting to buy these shares, they must hold the 1950 level, or else we would be out, because that drops you back down into this trading range. We don't want anything to do with that. It may trade down there intra week, but you don't want to see it close next Friday down below 1950. Daily chart. Gary, they make Atkins bars? Oh, really? Is it? I like that stuff. Okay. That's a good business. Huge margins. All right, so here's our alert. I think you're going to get a pullback and a retest of either $20 a share or down to, ideally, down to that 1980 mark. So I would wait. There's no rush here to get long of these shares. You can see how on Thursday we spiked up higher. We hit resistance. We backed off slightly. I would wait for a pullback and then just keep a tight stop here. You don't want to see these shares close back down below 1950 per share by next Friday. That would be a failure to hold a breakout. ZS. Monthly chart. No new monthly high yet. Take our crayon out. Good looking chart, strong. Weekly view. Here's where we get a little bit nervous. I don't like topping tails. That's a sign of selling pressure above. Let's see whether or not we have a lot of overhead supply. I don't think so. I think this is a fairly new issue. We do have extrapolated out some resistance above at around 123, 124 per share. But right now, all I'd be concerned about is resistance at the 113 mark. If we break through it, that would be very interesting. We'll keep this active for the week. Daily chart. Oop. Yeah, so on Thursday, we saw a bearish reversal bar. This would be a nice entry point. Okay. Again, we'll keep it active for the week, and we'll see what happens. Let the chart come to us. Let this, we don't need to chase it. It's got to prove itself worthy of our investment dollar. Gary, I took a look at Yang earlier. It gapped down. It's looking interesting. It's getting a bit oversold. You got it, Oliver. Microsoft? Okay. All right. SE. We have a lot of new gold members, man. All right, so this is a sloppy resistance level, but here it is anyway. We attempted to break out last week. let's get rid of this. I don't like this chart, this ray I drew. Let's do this. We did break out last week. We have broken out. 116.78. That's a daily chart, though. I want to stay consistent. I want to do multi-time frame analysis as always. Oh, boy. Can we go higher? Yes, we can go higher. Very strong stock. But very extended. You have RSI here at 92.54. Be very, very careful. It'll probably make a new weekly high. RSI on a weekly basis is at 89.50. Again, it's probably going higher. I would not short this stock yet. There will come a time, daily chart, and only for a scalp. I'm not saying it's going to crash or do anything like that, but I think that these shares are going higher. But be very careful. This is a perfect example of when I would want to use a trailing stop loss order. Let the market take you out. Keep it kind of loose, but keep your stop in there. And if the market takes you out, don't step back in. And let's take a couple of symbols. We have some time left here. What time do we have? 6:42. I do want to go back and take a look at the futures action before I sign off. All right, so Microsoft, I mean, it's an animal. It's absolutely an animal. I can't go over Microsoft without doing what I do, what it seems to be twice a week live, but I have to do it because I'm like an old grandmother when it comes down to this. Here's your quarterly chart. This is the value of multi-time frame analysis, because when this goes, brother, look out below. It is not going to be pretty. Quarterly chart, we have RSI at 92.08. And believe it or not, we have been higher in the past. October of 1999 was the peak at around 98 on RSI. But this is not the go-go.com days. This is a manipulated market. Yearly chart, Microsoft 93.30 on RSI. That being said, do I think the shares are going higher here, despite the fact that on a quarterly basis, a yearly basis, the shares are ridiculously overbought? They're probably going higher. So monthly chart, new monthly high already. So the probability of us closing higher in the month is very strong. Weekly chart. Thus far, this month, powerful. Last week, an outside reversal bar. We fully engulfed the prior week's fairly bearish move. I mean, we closed up the prior week, but we closed well off the highs of the week. And then last week, just blew right through it. They tried to take it down. There were bids down there. Shorts covered. We're going higher. Daily chart. And if you take a look at the XLK and the SMH, both had very nice weeks last week, where you saw a pullback off of the highs for many of the sectors. What closed near the high, not at the high, but near the high. Semis and XLK, technology as a whole. Biotech did well. Healthcare did well. Daily chart. So a little bit of selling off the highs on Thursday, but in all probability, we're going higher here. These shares are not a short. You know, when you see this time and time again, the stair-step price action, you can't ignore this. I mean, this is just consolidation. breakout. Can't fight it. If you do, you're going to go broke. Boeing. Make sure I didn't miss anybody here. Oliver, why the call on Baba, the Chinese stocks? Baba stock split. Stock splits don't affect this price. It has no. Don't pay attention to that stuff. There was a time many years ago during the dot-com days. This is the peak. Dell Computers split. On that news, it shot through the roof. I know. I was long of it. I sold it because it just didn't make sense. Not that I was extremely intelligent about technical analysis at the time, because I wasn't. Because any monkey could throw a dart at a board, at a stock page, buy it, and the stock would go up back then. But I knew it just didn't make sense. And sure enough, the shares split. They paid a dividend, and the shares dumped. They never returned to their old grandeur. Don't get lured in by stock splits. Don't let it happen to you. It means absolutely nothing. Maybe a little bit less volatility. Other than that, doesn't mean much. What was I going to do? Form? Oh, Yang. We'll go with Yang. I'm going to try to stay in sequence here. So Yang, as a matter of fact, let me bring it up on stock charts. I should have added this to the watch list. Maybe I will. Only for a trade, though. Oh, wrong list. Sorry, folks. Wrong list. Usually I am ready here. Oh, here we go. Yang. Okay. I think we could still head lower here. This is a pretty nasty break last week, but we are trading down below. This is a 2 standard deviation Bollinger Band. I think we could go lower, but this is becoming interesting for a brief counter trend rally. Otherwise, the path is clear. It's going down further. So be careful, but a possible trade is at hand here on Yang. I don't think you need to go over the weekly charts per se, because there's nothing below. I mean, you take a look at a weekly chart. We had an outside reversal week last week. In all probability, we're going to go lower. Yeah, I'm not buying any Chinese stocks myself, Oliver. I get your point, pal. Will be a war soon enough. Form. Beautiful run. But you're through. This is a monthly chart. You're through. This is me personally, I'd be booking profits here. You're through the upper band of resistance. Your upper band of this long-term trading range, going back to when? January 2015. It's ring the bell time here. We're trading above that resistance level. The question is, do we hold it or do we fade? Let's see if the market sent us any signals last week. If anything, to be fair, it looks as though on a weekly basis we're probably going higher, which is in direct contrast with what I just said about the monthly chart. But I don't make the rules. I'm just telling you what I see here. Both charts look very, very powerful. Weekly and monthly. The weekly is implying that we'll probably head higher, but that monthly chart is sending you a signal. So, me personally, despite the fact that it appears as though we're going to make new higher highs this week, another perfect example, set that trailing stop loss order. Daily chart. Let the market take you out. Daily chart, we gapped up higher. Beautiful. Doji formation on the day. Sign of indecision. We may pull back, fill this gap. I wouldn't be a buyer. I'm not going to set an alert here. I think it's very extended, but it could fill the gap. It could continue higher. I wouldn't short these shares. I think that it's very, very easy for me to be embarrassed tomorrow or to say to short these shares. I think that they'll pull back probably, fill the gap, consolidate, move up higher, at least for the next couple of weeks. But be careful. That monthly chart is haunting me. So be careful, please. Chart looks good otherwise. Total Momo play, momentum play. Folks, if you just joined in, if I can ask you to hit that like button, I'd really appreciate it. Thank you very much. And thanks for joining us. Boeing. We booked profits on Boeing at 204 per share. Where do we close out? You can see I have alerts set here. This one fired off, but I didn't act on it. And thank goodness I didn't. I wanted to see if we could close above 191.82, but we couldn't. It failed to hold. So last week, I believe I spoke about this. I was looking for a price target at bare minimum 173.60, ideally down with a 150 handle on Boeing. Excuse me. The monthly chart, we're just off the lows of the month, but there's a lot of time to recover here. We're stuck in a trading range. You know, if they close above 191.82, I'll reset the alert. You know, if the market's strong, I would entertain a long trade here. And this time around, I would probably just take a few shares, keep them in the long-term account, and sit, watch, and wait. Keep it active for the week. Good to go. Ideally, though, I have to say, I would love to see a 150 handle on Boeing. Doesn't mean I'm going to get it. Daily chart. A ton of resistance up here. I think at a bare minimum, we're going to pull back to the 173 mark on Boeing, and ideally, you know, we get a washout in this market. And you see a 150 handle. I keep saying that, but that's where I'd really like to get involved with Boeing. The one thing I will point out is that Boeing is putting in a higher low on its RSI. So beware. You know, this market, since the Federal Reserve has started up the printing presses, it's become more and more difficult to be as accurate as I would have been prior to the Fed intervention, prior to the pandemic. You know, prior to the pandemic, had you seen reversal bars like this, it was pretty much a foregone conclusion. You're going lower. But nowadays, you really need to wait for the event to unfold rather than anticipate the break. Because I've seen all too many times where you get a bearish reversal bar, you could swear to God you're going to get a break the next day, and what happens the following day? It gaps up, right? Prior to pandemic, prior to the Federal Reserve manipulating the market, that wouldn't have happened most of the times. Nowadays, you got to be careful. You have to wait for the break. So Boeing, it appears as though we're going to move lower, but we need to be nimble. We need to keep an open mind. The Federal Reserve is in there. They're doing their thing. Christ, they're buying up the bonds of Toyota, Volkswagen. I mean, they're not even American companies, for Christ's sakes. So Lord knows what they're doing, what's in their head. Facebook. Facebook, you're seeing topping action. We're holding the breakout. 255 is stiff support. It was stiff resistance. We rallied last week up and into resistance yet again. This is a monthly chart. Let's drill down to a weekly. Nice recovery off the lows. Had some bad headlines last week. It recovered nicely. Some advertiser boycotts. I think that a pullback I'll give you the number in a moment. We'll keep it active for the week. This is actually set at the wrong support level. I didn't want to set it there. I'll change this when I have time. Thinking about the 228 mark on Facebook as a possible good long entry point on a pullback this coming week. Ideally, it does come down to the support level. I'm going to keep this active. 225 is a great entry point. But I would keep a stop loss right below that mark. Because if we break back down below it, Facebook has probably got some trouble ahead of it. Otherwise, I think that the shares, for now anyway, are going to proceed higher. Daily chart. So we hit resistance on Thursday, reversed on that. Again, I like the support level between 225, 228 per share is very attractive. I don't like the trade on a break below that 225 mark. I would avoid like the plague if we break back down below that mark and close there. I'll take one more here, BRE, and then we'll go to see how the futures are doing. And I will bid a fair adieu. BRE. Why is that not coming up for me? I'll ask you to check that. Oh, you know what? We'll do work. BRE is not coming up. Work. That's Slack, I believe, right? Andy, I did BA a few minutes ago. If you want to go back to the replay, and you can probably just scroll back now and take a look at it. About 5 minutes ago. All right, so Slack is interesting. It became very overbought. This is a monthly chart, not a lot of data here. 29.23 is good support. We closed at good support as well. $30 a share, thereabouts. Very nice. What did we close? 30.31. Nice. Very nice. Weekly chart. Holding support. We did close near the lows of the week, which leads me to believe that we may see a continuation move lower. I think that might be, with the spike in COVID cases, that might be an opportunity to buy, despite the fact it's a new weekly low. If we can get down to that 29.23 mark, that would be a good entry point. An even better entry point. What's the low at this bar here? Low was 28.72. I'm going to create an alert for Slack. I'll keep the sensitivity level pretty wide, and that'll encompass close to that 28.67 mark. Here, widened it out a bit. Okay. Keep it active for the week, and we're good to go. This zone here, very attractive for Slack. It may just pop up higher. Let's check out a daily chart. It may not even come down to that support level. We may get it. But it did close at support. They may pop it up. But if they don't, here's why I would want to be a buyer. Between 29.30 and 28.75 with a stop loss just below 20, say 28.30 around there per share if we close down below that mark. Excuse me. Watch the 200-day move. Actually, it's not a 200-day. This is a 20-period moving average. These moving averages are not going in the right direction. I'm not huge on moving averages, but I don't generally like to see them cross below each other when I'm looking to put on a long trade. So a little bit of a warning flag on the track there. Let's go back to the futures. Hey, Anthony. Happy Independence Day to you too. All right. Nat gas futures continue to have a bid underneath them. Let's take a look at the equity market. We have now turned positive on the session. At current, we are breaking out. This is a 4-hour chart. For those folks just joining in, these are all 4-hour charts. We're breaking out. Doesn't mean we're going to close there, but it's looking optimistic. Despite the doom and gloom in the headlines, RSI breaking out, validating the recapture of support. I think if we close out this 4-hour bar above this resistance level, it's still resistance. We haven't closed out the bar yet. If we close out the bar above it, we're setting up for a nice morning tomorrow morning. Small caps, they continue to gain strength. We are currently flirting with a recapture of prior support at current resistance. RSI has broken out. That's in the books. It's happened. Good stuff. Let's check out the dollar. The dollar is still down off the lows of the session. RSI flirting with a breakout here, despite the fact that the dollar is weak. Light sweet crude. Energy is key, folks. Energy is key. They need to keep a bid under oil, and they have rallied it back. It looks as though, while we're still down a little over a third of a percentage point on the session, they're going to rally it. So it looks like, given the news with Berkshire making an acquisition in LNG, and I need to do more analysis on that, I think that we may see a risk-on trade this week in energy. You have nat gas rallying. You have oil coming off the lows of the session. So keep an eye on energy this week. Buffett coming out of the woodwork, because he's been very, very quiet these past several months, and making an acquisition. That's going to be headlines tomorrow. Gold. We're still down, consolidating. Silver. Oops. Still up. Not much change since we last went over this. Bonds. Bonds are interesting. Bonds are weak. Now, the 10-year yield, I've been talking about this with members quite a bit. The weekly chart of the 10-year yield has been signaling for the past couple of weeks that we may get a pop-up higher. And we did see that last week. So what we did is we bought the banks. We started buying the banks because when the yields go up higher, the banks will rally along with yields. When yields pull back, the banks pull back. So you saw the banks rally with yields last week as anticipated, but we did pull back on the banks. If this holds, if we see continued weakness here on yields, I think that we'll be buying more banks. I don't feel great about it going into earnings season, and I may not hold them through earnings season. But the trade for the week may be energy banks. And if you see yields rise, be careful putting on gold trade, silver trade. Usually they'll pull back, and that's why I wanted to put the bank trade on to offset our gold mining position so that we had somewhat of a hedge on strength in yields. Lower highs on RSI. This is a very interesting chart. Pay attention to the 10-year yield, folks. So this chart, what I mean here, this is not a chart of yields. I'm not misspeaking in a way. For those not familiar, when bond prices pull back, as they are at current, yields are moving up higher. So that's what's going through my head right now. I'm just not articulating it appropriately for those who may not be familiar. So my apologies. Let's leave off with the Vixx. Vixx is pulling back nicely. It was hammered last week. We're back down with a 20 handle on Vixx. I'm not going to be happy until we're back down below 25. If we're back down below 25 on the Vixx, you're going to see money flood into this market. So with that, folks, I'm going to say everybody enjoy the remainder of your weekend. Thanks for joining me tonight. Smash that like button if you would. I'd really appreciate it. Everybody be safe this week. Have a profitable trading week. Be well.